Hi everyone, this is a short screencast for Independent Colleges Dublin for CIMA E2 for November 2014. Now draw your attention to question 2 of March 2012. And in this particular screencast, we're going to be looking specifically at the steps involved in managing risk and indeed the strategies that you could employ to manage risk, of which there are 4, as we know from our mnemonic TARA, T-A-R-A. Okay. In terms of the scenario, fairly short, just a little bit of information about how important it is to manage risk within a project, and just ask for the steps involved in that risk management process. Okay, so in terms of the answer and how it comes at it, really this first part here is just really a short intro, just to say that obviously managing risk is important, or monitoring them is important. We need up-to-date information in order to analyze and evaluate them. And then they go straight into the steps, and this is quite important. They use a sort of a list style approach to the answer, so it's key that you remember these areas, and they're very much what you would expect. First area here is to identify the risks involved in the project, and that's very much going to be a list of some kind or other. Obviously what we're concerned about is are the risks that are going to affect performance. Any risks that aren't going to obviously affect performance are not relevant to us. There may be some low-level risks that aren't overly important. So first area is a list. The next issue is really, once we've listed them, we just need to establish, I guess, their priority in one sense, but just the probability and the impact, so likelihood and impact. And as you would expect, what we're looking to do is to detail clearly the sort of financial consequences or the financial impact of a particular risk materializing. So key point then is just what's the likelihood and what's the impact after we've listed in the section above. Now, given the fact that we'll know then the probability and the impact, we can sort of prioritize the risks on our risk matrix. And in effect, what we're doing there is just ranking them in order so that we can deal with the more important ones first, and so on. The next point is just management, and we'll touch on that below. Essentially what we're saying is that we'll have a list of prioritized risks, and what we'll be looking to do is to put in place some sort of strategy for managing from the highest priority downwards. Okay. Last thing, don't forget this one, just this idea of, the process is ongoing. In other words, we need to monitor risks. It may well be that some risks materialize as the project moves forward, so it's important for us to track the progress of indeed the strategies that we've employed, and also assess whether or not any new risks have emerged. Okay, so in this particular section, fairly straightforward. We're talking about identification of the risks. We're talking about assessing, the impact, the magnitude, and indeed the probability of each risk occurring. From that, we want to prioritize in some way, what are the most important risks, what are the least important risks. From that point onwards, obviously the high priority risks, we're going to employ some strategies in some way in order to mitigate them. And then really the last point is that it's not over there. We need to monitor how the strategies are going. Is everything working as we planned? And indeed, over and above that, have any new risks emerged since our original evaluation? Okay. Second part here, part B, I would have thought maybe this is the easier one, because hopefully we'll remember those strategies and that mnemonic of TARA. The first one here is just really this idea of avoid, in other words, risk avoidance, and it may well be that that involves you not pursuing the strategy at all, or perhaps adjusting in some way, or adjusting one particular element of your objectives or indeed your goals. Transference, probably easy one to remember. We're either going to transfer it out to perhaps a subcontractor or a specialist supplier, so that it's their responsibility, or the old classic of insuring it in some way, shape or form. So insuring ourselves against the probability of the risk happening. Last one here, reduction, sort of linked into avoidance in one sense. We try to reduce the probability of this particular risk happening. It may well be that involves putting some further sort of controls in place, possibly Prince 2, etc. Okay, last one, really sort of just really put up or accept a risk acceptance. And this is just this simple idea that we don't really do anything at all. We just accept the fact that risk is inherent within this particular project, and we just move forward. Okay, so pretty a straightforward area, and all some rote learning for us to do in terms of the the steps, ID, prioritize, etc. And then over and above that, those 4 strategies. These are quite common. I'd certainly have a grip on that mnemonic. Pretty commonly examined if you look through the past CIMA E2 questions. Okay, many thanks for listening, and hope that's been helpful.